Welcome everybody then to the hardest Section A questions from the March 22 exam for FM according to the examiner. Let's get straight on with it then. So the first question talks about semi-strong, strong efficiency of market. Let me remind you about market efficiency then. So if you've got a weak market, that market's prices only show past information. If you've got a semi-strong market, which most like stock exchange markets are, the market price, the share price will show you the past and the public information. That's what it's aware of. That's what it's built into itself. But if it was strong market, it would know the past information, the public information, the inside information. Its share price would know everything. Okay, so that's the knowledge. This question then says, right, we've got this company and their share price was $6, okay, yesterday. 2 days earlier, they approved the launch of 2 products, but it's not been publicly announced. Okay, fair enough. So we've got this product A that's going to be announced tomorrow. Product B is going to be announced this morning. Right, so product A is going to be announced tomorrow. Product B is going to be announced this morning. Now the question said, what will be the share price at the end of today? And I'm looking at the semi-strong one first. So the semi-strong, if you remember, is past and public. By the end of today, one of those will now be made public. So the semi-strong would take into account one of them because it would now be made public. And it would be this one, 160 million. Announced this morning. So by the share price at the end of today, it will have taken into account that 160. It won't take into account this MPV of 40 because that's not announced until tomorrow. Remember, it's the end of today. So it will know about this morning's. So semi-strong market. MPV was 160. You had 800 shares. And so therefore, the share price would increase by 0.2. Positive MPV 160, 800 shares, everybody's share would increase by 0.2 because that's now been made public. The share price at the start of the day was 6, and so by the end of the day would be 6.2. Okay, so 6.2 in a semi-strong market. Now for a strong market, well, they knew everything anyway. They knew past, public and inside. So they knew exactly what the board knew. So yesterday, $6, and 2 days earlier, the board had already approved the launch of 2 new innovative products. So the share price, if it was a strong market, it would have known about these 2 MPVs. And so the share price of $6 would be right because it knew the past, the public and the inside. And so it would just stay at $6. Okay, so that's semi-strong. It knows past and public when it arrives. Strong, it knows everything. Okay, so it's always like the perfect price. Moving on then to question 2. Which of the following statements about an over-the-counter interest rate? Over-the-counter means you're buying it from a financial institution, so that's right. You can't trade options, over-the-counter ones, but the whole point of getting an option is like, oh, you don't have to exercise it, but you don't have to exercise it, so you can't lose, and therefore you must pay a premium, okay? And it can't, and the whole point is not that it must be exercised. The whole point is it's an option, so it can be or it cannot be. So the answer must be 1 and 3. Moving on then, question 3. Which of the 4 descriptions relate to main macroeconomic policy? So the main macroeconomics, you want to have inflation, you want to have growth, you want to have equal balance of payments, and you want to have good employment. So let's have a look. Which are the 4 of the main macroeconomic policy objectives? First one then, ensure minimum amounts of price increases. Yeah, keep on top of inflation. Next one, increase national income and living standards. That's growth, isn't it? Yeah, that's one. Ensure a balanced ratio of imports to exports. Yeah, that's your balance of payments. That's one. Maintain interest rate at minimum levels. Well, you might want that, but that's just a tool. Balancing government spending with tax receipts, that's just your fiscal policy again, it's a tool. Ensuring a stable and fully employed labour force, we want employment. So there's the four things you want, the four macroeconomic policy objectives. Contain inflation, have growth, good balance of payments, and finally keep employment high and unemployment low. They're the four main ones. Remember, these are the four hardest questions according to the examiner from the last exam. Right, let's have a look at this then. It's talking about what will be EPS. Well, EPS is earnings per share. So let's have a look at the earnings. It tells us they've just reported a profit after tax, that's what goes into EPS, of 55 million, and they've got 100 million shares. So the current situation, earnings divided by shares, is 0.55. But then it says we're going to issue more shares at a price of 150. So we're going to have 50 times by 1.5, and that's going to pay off a bank loan. So here, look, I've written 50 times 1.5. That's the money that we're going to get in. And because we're going to get that money in from the shares, we're going to pay off a bank loan. And that bank loan costs us 8%. So by paying off the bank loan, we are saving the interest on it. Okay, so 50 times 1.5, that's the money we're getting from the shares. We're going to pay 8%. We're going to pay off the loan and therefore save the 8% that we're paying off the loan. But the bad news about that is there's a 20% tax rate, so we're not saving all the 8% because that reduces our tax balance a little bit. So 1 minus 20 times by 8%, the actual savings then would be 4.8. If we use this share issue to pay off a loan, we save the interest, tax adjusted, so we save 4.8. How many shares did we actually issue new? 50 million. Not 50 times 1.5, that's the cash coming in. It's always earnings per share, per the number of shares. So shares were 50, and that's it now. We can add it across. So 55 plus 4.8 is 59.8. Number of shares, 150. 1 divided by t'other is 0.399. So the answer is A. Okay, so that's you have now looked at the four hardest Section A questions according to the examiner from the March-June 22 papers. Good luck with your FM exam.